Morning, guys. Good morning. Good morning. Good morning. Somebody give me a sound check. Let me know if you hear me okay. Good morning. Let me share my screen. I'll show this screen too. Good morning. Everybody seeing the screen? Are we going to let people drift in a little bit? Have a had a nice big dip in the Dow here just a couple of minutes ago. That would have been a good trade. It's been a very good night for the longs. Actually, I'll share my longs with you. So let me show you the longs. So we just had a long. Remember, the long strategy is trend break, retrace signal, long, right? I've actually expanded. Basically, I've widened both stops and targets to 20 stop, 12 target. It's a 60% of profit target. The break even on that is 62%. And obviously, you're shooting for a 70% or better ratio. So, 60% payout trade on a hopefully 70% probability ratio, you're doing very well. Overnight, it's actually was considerably better than that. If we look back, let me just come back to you. I'll show you all the trades. So positive trade here. This is just the long side because this is the only the short account is on the other side. So there was no longs here. Positive trade here, right? Breakout, retrace, shallow retrace, nice big pop. So two trades, and then a third positive trade here. So breakout, positive trade, a lot of slippage against me, but it doesn't look, it actually looks much worse than it is because this is Asia sessions. So the bars are very small. I think, the purchase here was 2650 and the absolute retrace low was 22. It's only four points against me actually, but it looks much worse on the charts, but it hits again. The reason I decided to kind of extend is because I went back and I looked at a lot of the both the longs and the shorts, and they were, if it went for 6, it went for 12. It was, you had a chance to make 12, and that allows you. The point being is that if it's going to extend, it's going to extend to that level. What that allows you to do is, by the way, just keeping an eye on this, trade. If we can get a retrace candle here, I'd like to be short the Dow, just in case. It's not a classic trade of ours, but wouldn't be a bad trade if we could get a retrace candle out of here, because I still think we might have a little bit more of a downside move here. Just a remarkable turn, by the way, in Nasdaq. Oh, sorry, I'm doing the wrong here. This is the Dow. I need to go to the Nasdaq chart. Just to kind of shorten it up. Just a really interesting. I'm noticing this quite a lot, where the first hour of New York tends to reverse. Almost always tends to reverse whatever is happening overnight. If overnight was a big move up, we like to bring it down. If it was a big move down, we like to reverse part of it up. It seems the market really likes to reverse the European moves. But regardless, I mean, that was actually a very clean night on the long side. The short side had some bumps, but it actually wasn't nearly as bad as all that. I'm watching this. This isn't quite making the giving us the retrace arrow. So I'm keeping an eye on this. Let's see how much time we have. It's 21 seconds. Okay, this is blocking my view here. So let me go full screen on this. Okay, so if we go full screen, then I can actually watch this. So we'll watch this candle. This candle turn, stays red. I'm tempted to short this with like a like a, but it's got to stay red. If it doesn't, then it's obviously it's not. Just trying to see, really playing around here. Not much. No trade here. No trade. Okay, we'll let that play out. Maybe it's completely reversing up. It's interesting. I still think there's a little bit more downside price action in the Dow. But anyways, the short side on the Nasdaq, and I don't have the no, I don't have the account here. So I'll just have to show it to you. Remember, the short entry is not off the retrace; it's right off the trend break, right? So this, I actually did do this trade. This trade worked beautifully for plus 12. I went to minus 20 plus 12 on the short side as well, because again, if it was good for 6, it's good for 12. Like 7 out of 8 trades that went plus 6 also went plus 12. So market entry on the close of this candle plus 12. So that was one positive trade. Then this trade retraced quite a lot, but if you had a 20-point stop, totally survived it. So it was actually 2 positive trades. Sorry, this is the trade, right? 2 positive trades. This trade worked as well. So that's actually 3 positive trades. I think it was, and here is, I believe this is also 4 positive trades, because this was you got short here, 58. You have a 20-point stop. The highest it goes is 68, only 10 points against you, and then it drops for 12. So now you're like 4 for 4 on the short side, and that's pretty much it. And then you had, no, you had like one more short here. Oh, you had one false short there. This was a false short. So literally 5 for 5 and then 5 for 6. That's an incredibly hot ratio. You talk 5 out of 6 on the overnight trade. That is actually ridiculously high. It's an 83% win rate against a 60% payout with a 62% break even. So I guess that will not last. But the idea here is as long as you can consistently stay at 70% or better on this kind of a ratio, what I call a 60% payout ratio, you have a tremendous profit margin, because your break even is 62, and if you're at 78, you have like an 8% profit margin. If you're even better at like 72%, it's a 10% profit. 10% profit margin is incredibly fat, right? So that's basically how it's all been setting up. The indicator now is fully finished. It's very accurate. It's giving the right signals. There are occasions I notice where you will do a whole signal, which is it will give you the retrace signal and the trend breakout signal on the same candle. This happens a lot more in CFDs than on futures. But basically, it just means that the candle kind of was super wide, both up and down, and therefore, took out all the levels. Not much to read into it. Anybody have any questions for me? Oh, we just started. It's just 10 o'clock. Yes, you have to. For me, here is asking me, do we wait for the candle? We always wait for the candle close. So if it's a black candle, trend break, wait for that. If we're on the long side and we're buying a dip, then you wait for the yellow candle. It's always on the candle close, because otherwise it's too imprecise, right? You need the candle to confirm to you that your thesis, at least at that point in space and time, for that 1 second, is really legitimate. And the point being is, if they can close the candle on the upside or close the candle on the downside, that suggests that the momentum is in your favor. We're always trading momentum. We're always trading, buying or selling forces. Now, those forces could evaporate at any given time, but the assumption is if they started, that means there's a better than a 50-50 chance that they'll continue. That's really all we're betting on. Our whole methodology is that there's a better than 50-50 chance that they'll continue. And in fact, we're making a claim that there's a 70% chance that they'll continue. And as long as that claim holds up, we have a very, very profitable setup that just continues to work. So now we broke to the upside on the Dow. I'm actually curious to see where the German is. German had a trade here. That was a little while back. So really, we don't have any legitimate trades here anywhere on the spectrum. Just have to, watch it with amusement right now. I don't have the indicator in TradingView, but I think we're going to switch to TradingView for currencies, and we do have the OO indicator in TradingView. Oh, look at NAS. Oh, the NAS is just popping. Okay, you know what? Let's play the NAS. Long here 58. Long here 58. Let's see. I mean, it's a big chase trade, but let's see if we can make 68 out of it. Just at least trying to make the 10 points. It's a 20-point stop. So 38 stop. Let's see if we can see if this will extend, give us like a 10-point move here. It seems like we had a big breakout. Can we push it out? It's a variant of the yellow trade here because we came into the moving average, we came back out strong. It's 64, 65. And I'm trying to see if I can get 68 out of it, but 64, 65. All right, you know what? Take the 65, 67. Okay, good. 67, 68. There we go. Plus 10. So that's a 10-point clean idea in a sense that you say into the support zone, out of the support zone really strongly, and now even higher. So that popped nicely for us. That's really the bread and butter trade of the uptrend. Remember, as I said, there's a very distinct difference when you're trading equities between how prices move in an uptrend and a downtrend. And then in an uptrend, we have lots of opportunities where they come into support and then extend the uptrend further because there's always an upside bias in stocks. Whereas in a downtrend, basically equity, they fall, and that first fall is usually the best place to get in. It's the collapse, right? Now, it doesn't mean that there isn't examples where you have retraces that you could trade to the downside. It's just that they're not as common and not as accurate. And therefore, they fall back. Conversely, by the way, when prices break out on the upside, they quite frequently retrace back down to support. So the breakout on the upside is nowhere near as accurate. In this case, it's obviously pretty accurate, but it's nowhere near as accurate as the downside breakout. The breakout, the downside is kind of collapse that pulls prices down right away. Whereas the upside breakout is just simply the first step in what is often a multi-step climb process. And you can really see that very differently. And that's why we distinguish between uptrend segments and downtrend segments when it comes to equities, and trade them accordingly. And now, so for currencies are completely different. Currencies are completely different, and we'll take a look at. We'll take a look at the. As a matter of fact, you know what? So we have the indicator, right? So let's just take a look at some of the currencies. But for currencies, we're going to go on like 1 hour charts. So let's look at euro. Let's look at the three primary currencies. euro, pound, and yen. And all right, we can start. We can start with a 5-minute chart if you want. Although as I said, my preferred method of analysis is the hourly chart when it comes to currencies. But in currencies, what you can see is maybe I'm too. I need to get a little cleaner here. What you can see in the currencies are basically two-way instruments, and downside and upside. Downside breakouts still selling the trend break generally is usually a pretty good idea. But so is selling the retraces. Very often, in currencies, actually selling the retrace, which is the yellow arrow, is perfectly okay, both to the downside and to the upside. Currencies tend to be breakout, retrace instruments because they are like short-term momentum, a little bit of profit-taking, continuation of momentum, and both to the upside and to the downside. And therefore, when it comes to currencies, we could easily. Here you have a clean collapse, but even this trade is ultimately a net positive trade. This is a 5-minute chart. If you're trading the 5-minute chart with a 2010, you're short at 18.12. 32 is your stop. It doesn't even come close to 32 your stop. And then your low here is 03. Almost makes the full 10. Almost makes the full 10. As I said, I'm really not a lover of trading currencies on anything less than an hour because basically currencies move 10 pips an hour, right? Whereas equities move 10 pips a minute. So when that happens, let me just adjust this. When that happens, it's much better to trade on the hourly chart than it is to trade. What's going on here? Why can't I move this? Oh yeah, okay, I can move this. Okay, it's just I just think it's a better. You're not going to get as many trades, but you have lots and lots of instruments to choose from. So here is euro, right? Here comes the retrace trade here. You're short here at 92. The worst that goes against you is sorry, no, what are you short here? What is the number here? 1892, and it goes up 11. So yeah, it goes 20 against me at the worst point, and although it does drop over here to definitely almost 20 points my way. So if you traded with a 10-20, you certainly would have made the 10 points on the move here. But then then it had this is actually a very weird. This is the intergap chart, so you wouldn't even hold it to the end of the week. So let's just say, okay, you took a 10 over here. Here you have just a classic failure. You're gonna get fails on retraces occasionally. Here you have a clean sweet break. I'm actually if kind of extending my idea. If we're gonna trade 60% of risk, there's no reason why you can't trade 12 pip forward, 20 pip backwards on currencies as well. The model should hold up. So it definitely holds up in this case, certainly holds up in this case. So now you have 2 wins, 1 loss in the euro. If I go backwards, I come in, and I'm buying over here. What's my retrace point? It's 84. 84, the high here is 24. Yeah, it makes more than, no, 10. Sorry, this is 1910 plus 12 makes 22. This goes to 24. So fully makes the case, makes the move again. Here, this one is a clear winner. This one is a loser. So now you're like 5-2, which is a reasonable ratio. This is actually so 5-2 is 5 out of 7, which is a 71% win ratio. 71% win ratio against a 60% to profit target with a 60% break even is exactly where you want to be. It's just it's as sweet spot as you can make it. Now, when it comes to pound, pound is always twice as volatile as the euro. So I don't think you could get away with a 20 stop 10 target, but we can take a look. I think the pound probably would require, maybe not. I mean, I don't know. Failed here, win here, win here, I believe. Let me just make sure that I can survive the stop. It's a 78 close. And what's the lowest over here? Hold on. What is the low here? Wait, 37.75. And the close here is, wait, so, oh, it's a 1 minute chart. I'm like, what is going on here? I'm like, this is definitely wrong. Sorry. Okay, it's a 1 minute chart. Yeah, so win here, clean win here. Probably, I'm not sure if this is a loss or not. Let's see. 39.11. The high here is 20. No, it's a win too. You still make 12 points. Still got the nice momentum. So 2 wins, 3 wins for sure. Oops, I can't move this. 3 wins for sure. This I think is the intra-week break, so I wouldn't have taken this trade. It's a false trade because it's a Friday close candle. I wouldn't want to do this. So was that 3 wins? This one probably retraces against you. So you short 35s. If you use the 20-point stop, yeah, you get blown out. Okay, so you're blown out. Sorry. So 3-1, 3-2. You're going to get a sequence of bad trades. 4-2, right? 4 winners. 5 winners, 5-2, 6-2. Okay. I really want you to really absorb that. Ooh, what did I just do? Oh, how did that happen? What did I just do? How do you paint on this thing? What did I just do? Control Z. Wow, that was so cool. I wish I knew how to do this. Control Z. All right, whatever. Anyways, so the point being is it's all about probabilistic ratios. How did this happen? What did I just do on all my charts? Or how did I just scratch on my thing? Oh, maybe I'm drawing on Vimeo, on Zoom. What did I do? Meeting controls. What did I just do here on my Zoom? Annotate. Oh, I hit annotate. I want to undo. Undo. Clear all drawings. Oh, there we go. Oh, this is so cool. Oh, this is so cool. So we can actually draw on this. Oh, beautiful. Wow. That's cool. All right. Anyways, let's take a look at, sorry, let's go to the mouse. Let's take a look at the 1 hour chart on the yen. Just to kind of, so we took a look at 3 of the most common currencies, right? And 2 out of 3 works very well so far. Here's the retrace mode on the yen. That works for 12 points. Certainly, we're coming back. This works for 12 points. So it's 2.2. Sorry, let me just get. Always so annoying to be able to scroll out. That's 2 for 3. This is 3 for 0, right? 4 for 0. In a highly trending environment, this strategy is just money. I mean, you get very lucky. The dollar yen has, one of the ways to really optimize this strategy is if you have strong conviction, or you're looking at something that just seems in a very continuously strong trend. In this case, dollar yen, because of yields, has been just a monster fundamental technical trade, right? We actually traded this. If any of you guys were in the ACAP webinar earlier today, I traded. This was my favorite trade of the day. I was in at 60s. It's now 80s. It's just very obvious that this is a trending trade. So whether it's up or down trending trades, this particular trend entry technique that we have will catch it continuously. It's like the greatest thing ever. So if you're in an uptrend, every retrace is a win. So far, this is 5-0 simply because it's just been a super winner. He's a 6-0. You're back to February. You haven't had a losing trade yet. So you can see 7-0. I mean, it just continues to go. This is a very favorable regime. But when you get a favorable regime, you can imagine you're getting 6, 7, 8, winning trades in a row. You're way above your break-even ratios when you're doing that, and that's a very, very attractive thing. If you can just, if you have a strong conviction on something that's going to be trending up or down, applying this technique to it assures that you're going to be at the right place with minimal amount of slippage to make trades. All right, let's take a look at nothing in the Nas. Nas is slipping back. The Dow has a uptrend. Do I want to play this? I'm gonna try and wait until I get a retrace arrow in the Dow. I'm okay with taking this trade here at 25. Actually, probably will take. Let's take it at 27, just for argument's sake. Let's see 27. Let's see if we can make 37 out of this thing. Dow is probably going to be the bane of my existence, but all right. But I'm long 27s, and we'll see if we can make 37 out of this thing. With like a 27, back to the figure stop. If it comes back down to the figure, then I'm clearly wrong on this trade. Let's see if we can just push out a little bit. I'm forcing this trade. I'm not loving this trade, and if this candle doesn't turn green on me, then I'm going to bail out of it. But I'm hoping that this is basically a trade on continuation momentum. I don't have the exact setup, but it's pretty good, and I'm just waiting for it to extend. It's 31, 32. All right, I will take 30, 33, 34. Okay, let's take 32. It's 5. Okay, I'll take 5 on this trade. It probably could extend a little bit further, but it's okay. The most important thing is, we see the first condition, which is that we have trend signal. We have trend signal, and we're relatively within the trend signal candle, and it's been hanging there for more than a candle. We have a reasonable chance that it will extend a little bit, right? And that was it. That's probably all she wrote for now. Although this is one of those kind of things where I've seen it just hang, and then explode for another 10 points to the upside, because the Dow has actually been in a generally uptrend all day long. Main Street stocks still pretty much getting a lot of love from investors at this point. So definitely a better structure here. Looks like we might hit 37. For those of you who are patient enough to wait for 37, might hit 37. Let's see. 36. Pretty close. Anybody take those trades? Anybody took the Nas earlier, or the Dow right now? Who's in the room today? A lot of people. Anybody who's new, who doesn't understand? Hey, Connie. Hey, Cheryl. Who doesn't understand what we do? I need you to ask me questions, because if you're not asking questions, Karen. Good morning. How are you? I can't help you. You need to, or you don't ask questions and you just simply observe. That's fine too. But if you really want to, good job, Karen. Good job. Hey, Karen. I'm just curious. What's your spread on the Dow? Like, how tight is it? Is it a 1 or a 2? Like, how tight are those spreads for you? 1, 2. It's pretty good. That's pretty good. That's actually really pretty good. You can't really complain. Again, this wasn't a traditional trade. It wasn't a great, it wasn't like my setup trade, but it was within the rules, right? Like, I guess all we can say is we want to try to make trades within the rules if we can't make the trades exactly as the rules go. But yeah. And it looks like, and there we go. And then, as I said to you, if you were patient enough, it will extend, because what was all of this signaling to us? It was signaling to us that we returned to trend. We had a trend breakout. The bulls had control, and if the bears couldn't reverse it within the first 2 or 3 candles, the probability they were going to push it higher it becomes stronger, right? The bears just couldn't reverse the stronger push. In the meantime, NAS is fading a little bit, came back down, but this is what. So I hesitate to kind of share this setup because I feel that it's not a nearly as high probability setup, but it's also not horrible. And what I mean by this is I call this a fake out retrace setup. Basically, here's what happens: we have a strong uptrend, right? And then we have what seemingly is a downtrend, right? We have a moving averages crossover. But what this is actually, if I'm correct, and if this plays out this way, what this is, which happens quite a lot, is nothing more than just a shallow profit-taking retrace in what potentially is yet another upward wave, right? So if this is a false wave, although now it's not, if it's a false wave, then you don't get the trend break signal. You basically just, it never breaks the low 3. It kind of stays, and then when it breaks up to the upside, you can get it early. You sort of, once it holds the moving average level, you can just get in and hope for the V-shaped reversal. This is no longer holding on to those ideas. Now that we broke to the downside, is actually a legitimate downside sell. I'm hesitant to trade this particular look because it still looks to me more like a fake out than a breakout, even though this is very much to our rules. And we probably should get, we'll get short here at 10. Okay, I'll get short here at 10, 20 stop. Let's see if we can make 2,800. Let's see if this comes in. That's 3, 2, 1, and it does give me 2,800. So I need to trust my own setup a little bit more. So that was another one for 10 points. Connie, does this? Are you? I want to make sure, Connie. Make sure that you're using. I want everybody to make sure that you're using combo alerts when you go in here. Properties 1.30. 1.30. Because if occasionally, even this version will sometimes miss the okay. Because if you use anything less than that, you're not gonna get refreshed lines and everything else. This one really uses the lines as much as possible. But good job. I mean, I'm glad you took the 10 out of it. The setup still holds. I mean, I thought maybe we would have a corrective move, but it's not. It was actually a trend move, and now it's anybody's game. The thing is that at this point, it could easily turn into a much stronger trend, movement trade possible. The thing is, our tools are designed just to isolate the beginning of a trend segment, right? To try to optimize the probability of trading the beginning of the trend segment. The second component, which is like a big long-term, exit strategy, that's your lottery ticket. Sometimes the lottery ticket really pays off. Most of the times it just ends up flat, But the point being is that we have zero idea from this, from this point onward, whether this is going to be a major extension or not, right? Unless we have some kind of a fundamentally base view where we are, very good. Yeah, I mean, Connie, it's a good call because the frigging algo is we've been after literally thousands of failures, we finally got the whole thing to work properly. So these are good signals. I mean, these are just really good. These are just excellent signals, especially in this particular case, signals for NASDAQ, which has very, very specific properties that really dovetail with the strategy, right? So as I said, when you're looking at currencies, it's the retrace trades that are perfectly fine. You don't need to be a hero But when you're looking at NASDAQ especially, and you're looking at the shorts, you definitely want to be the hero. You definitely got to take the first opportunity you can. Even if sometimes you're going to get your face stuffed to the other side, more times than not, you'll be early to the to the only trade that matters, which is on the short side. What's going on the Dow? Let's go look at the Dow here. Dow is just blew up, so that long trade again. Remember, we caught the early thing. So now the only kind of a real possibility for us on the Dow is if we get a retrace trade on the Dow, then we certainly have a legitimate setup there. But that could be 2 or 3 candles away. We'll just take a look at that in a while. DAX also pumping up. The DAX retrace trade was early over here. We've already let that one go. There's plenty of opportunities. So, what's cool about this is that once you absorb the basic layout structure, it then allows you to analyze anything under the sun, right? We can look at currencies, we can look at indices, we could even look at crypto, right? So just curious, BTC, USD. How's Biddy doing? So we can lay this on Bitcoin. Yeah, Bitcoin obviously trades massive also, but it works just as well in Bitcoin. So you have look at this retrace trade on Biddy to the upside, boom, from here to there, 184, $300, 300 points on the move here, right? Bitcoin, to me, by the way, this is a really, really interesting insight that I think you guys will appreciate. Bitcoin is very similar to NASDAQ in that it has a strong upside bias, right? Like for now, we're in the regime that we're in, it's clear that Bitcoin is just basically a one-way ticket to the upside, right? So that means there's a strong upside buy, which means that our structure is exact same thing as NASDAQ. We sell the first break on the downside, and then we're happy to buy the retraces on the upside. Now this retrace fails, which is fine. This short works. This retrace works to the upside. Let's just go through this and you'll see. Okay. Here's the short signal over here, and if you get short here, what is that? 53. This is obviously 1 minute charts. We're going to ignore spreads and everything else because this is just for theoretical purposes only. I would never trade Bitcoin on a 1 minute chart just because the spreads are so wide. You have to give yourself much longer time frames. But just for theoretical purposes only, you're at 347 and it ultimately goes down to 172. So you have a 200-point move here to the downside off of the downside. Here's the retrace. It's not a lot, but it's enough to to pop you. So you are 525 and it extends all the way to 752. So another 200. It's good. It's good for at least a 200-point move on the upside. That's obviously nothing when you're trading CFDs because the spreads are so horrible. So to me, I wouldn't even look at Bitcoin unless I was looking at like a 5-minute or frankly, maybe even a 15-minute. I'd want longer term charts to kind of come in and analyze myself here. And again, same thing. Remember I said to you, the sharp downside breaks are taken off the trend break, which is what you want. Whereas the sorry, that's not crawling back. Whereas the upside can be a retrace continuation trade, because even here, with a 800-900 point stop, you have a couple of 100 points worth of movement. I mean, Bitcoin to me is basically an asset that you can't trade with less than 1,000-point stop. 1,000 points in Bitcoin is like 10 points in NASDAQ, right? It's kind of you have to look at it. So, but it's interesting. But the point is, the principles are the same. If you have a common behavioral set for an asset, which means there is a huge stampede of anything that's a bubble, right? By its very definition, means it's a strong upward bias. So Nasdaq is a bubble, upward bias. We only trade the retraces and just short the breaks, right? So even this short break, as I said, yes, you have some heat against you, but the heat is not unbearable. You're 246. The worst that goes against you is, wait, hold on a second. No, close, what am I? 27, 246. High is, yeah, you have to have 1,000-point stop. It actually goes $900 against you, and then it could drops $1,500 in your favor, right? So, I mean, I understand how absurd that is to talk about that on a 15-minute chart, but that's how the thing trades. So you have to, you have to appreciate that. So, that's just an interesting little observation. NAS reversed. Where's my Dow? Dow is just skyrocketing. German is skyrocketing. We don't have anything really significant to trade. Excuse me, it was like, oh God. Sorry guys, spring allergies. Oh, sorry about that. Anyways, even with kind of a minimal amount of trades, we still had, I think, 3 or 4. I already forgot. Definitely 3 trades that were positive today, which is good. And we can take, I think at this point, everybody should really have a very clear idea of the indicator, its structure, the basic buy sell, ideas. Next week, let me just see what Daniel told me right now. Hang on, maybe he can tell me if it's how close he is to finishing. Hang on, let me just check. Yes. Okay, so I'm going to speak to him later today. We should be able to, over the weekend, to finish up the algo, so you guys can have at least the like a working prototype of the algo by next week, which will be good. And then you can run. So again, only 5 because 4 is going to be next week. We're going to have to do 4 next week. Oh, Raphael. So Raphael's asking a great question. Okay, it's a little bit of a okay. So let me show you how to do this. So here's the indicator. Sorry, here's the indicator, right? This is Nasdaq. So now we're on a Nasdaq chart, right? And you go to properties, and I don't use, because obviously I'm running the algo. I don't care about using it, but I understand your point of view. So over here is the sound. It's the same alert for every one of these indicators, right? For every one of these, for the trend break, for dip break, for reversal signal, right? You can see all that, right? There's lots of alerts. Most of them, by the way, should be set to false, because the only alert you want is the one that you're watching. So if you're on the short side, you only want trend break alerts. If you're on the long side, you only want to hear the retrace, the moving average dip alerts, so on and so forth, right? But that still doesn't solve the problem of like, well, what if I'm doing Nasdaq and DAX and Dow? I need, how do I differentiate whether it's going to be a retrace on a Dow retrace? The answer to that is that you have to record different alert file for different symbol. So it literally has to say Nasdaq retrace buy, Nasdaq retrace sell, Dow trend break breakout, down trend break breakdown, right? The good thing is, Raphael, you don't have to do this. I'll do it for you. I'm going to create, since the strategy is pretty crisp and clear, I'm going to create NAS. Well, you guys tell me. Let's everybody vote. Top 3 instruments that you would want to have wave files created, and then what you do is you place the wave files. The way it works is you go It's actually very interesting. You don't put it into the. Let me close this up. I think I made a video on this one time before, but it's easy. So you open data folder. The WAV files themselves, don't go into any of the MT4 directories. They actually go. You have to go to this PC. You have to go to the C group, to the C drive. You have to go to program files, right? And because this is for 5, here for 4, it's going to be program files 86, and then into the 8cap folder over here, and then you want to go into the sounds folder. Okay, it's really very complicated. But then once you get there, you just drop NASDAQ, Dow, Euro, whatever you want. So Cheryl is saying she wants NAS, ES, and the Dow. Karen's saying she wants gold. All right, let's go. Give me some names. Jonathan wants ES, of course. Okay. All right, give me some more stuff. What else you guys want as a tradable instrument? If you don't vote, you don't count. So I want to see some votes in the room here. Well, NAS is a given. What is that? Is that euro yen or euro dollar? Okay, euro dollar. Okay, euro dollar is good. Yeah, euro dollar would be a good currency for us to do. Okay, how about we settle down on the following, guys. How about we do this? We do NAS, Dow, S&P, which is ES. We'll just call that S&P. Now, I'll forget that we won't do the DAX, and then we'll do euro and gold. All right, just for now, we'll start with that. I'll create those over the weekend for you guys. And so what we're going to do is there'll be essentially four sound files for each. One for trend break up, one for trend break down, one for retrace back up, one for retrace back down. Okay? No. Hold on, never mind. Do I need to do no, because it's just trend down. We don't need a trend break up. Just trend down. Well, I'll make them for both. Just we won't. I'm not going to get too cute about it. I'll give you 4 pairs for each, which means all in all there'll be 20 files that you guys can have, and then you can attach each file to each alert, and then you can be alerted to the trades. Does that sound good? Okay. All right, we got a couple minutes. Let's take we've done our indicator to death. It's been a good week. We find I know it's been a struggle. Like last week was a struggle. This week was a struggle. There was like huge amount of trial and error, fuck ups on the execution, the actual inaccuracy of the indicators. But we really I think at this point I feel very, very calm. We've had really 3 very calm, completely stress-free trading days, precisely because everything is working to spec. So you guys should be able to absorb this, and then it becomes kind of second nature to you. So the other thing that's in our pocket that I really that we haven't just looked at all at, and that I really like, just simply because we've been too too very much involved in designing this, and it takes a super long time to design this idea. This idea is much simpler. So this is the run for the OOs, 1 hour 1 hour charts here, and so the good thing is waiting on kind of running this, right? I actually find that we can borrow some mechanics from the other strategy to really make some of these strategies even better. So remember how the retrace strategy basically says it's a two candle formation, outside inside, outside inside, or inside outside. So we can appropriate the same technique, and essentially replicate it this way. So sometimes that technique, doesn't allow us entry. Like in this case, it's just pure momentum. It slices through the 1900, never looks back on the hourly chart, and just keeps going down. Whereas here, if you have candle below, candle above, right? So candle below, candle above, candle means that you have a buy trigger, and you buy obviously a little bit above the OO, but you have lots of confidence that there's going to be continuity. The OO trade is the same idea. It's a continuity idea, but it's just basically continuity idea on the principle of OO level, just a price level. And just by the way, notice, excuse me. I mean, this is a little. You have the weekend break here, so it's all kind of screwed up. But I was going to say, notice that here you have a break of the OO, and then you don't have, sorry, it has to be. So now I have to take it back. Okay. It has to be a triple. I guess when I'm looking at this now, it has to be a triple combination. Down, up, down confirms to the downside, right? Up, down, up, a triple combo confirms us to the upside, right? So in this case, it doesn't confirm us to the downside, even though it does extend a little, obviously a little bit to the downside here, and we don't get the execution here, but so if I'm going down, it's got to be up, up, down. I'm looking for a break here, up, close below, close above. No, I don't have any up down arrows signals here to make this work. I'm just looking at yeah. So this, I don't think this closes above, right? So this doesn't. Nah. All right, I'm gonna have to see how I could. It took a very long time to encapsulate the retrace trade in the other structure, and I may have to think really hard about how we could mathematically encapsulate this one for what I call an up down up kind of a trade, but because what I'm basically trying to see if I can avoid. It's easy to say break and hold and go, right? But break and hold and go very often also means retrace. Now you could have generally the retrace doesn't reverse, so it retraces and then it resumes the trend. But I'm trying to avoid the big reverses and have a minimal amount of slippage. So the problem is that it's you can't mathematically, like I can't do down up up if this up isn't quite didn't quite break the highs. It closes at 98 and only the next one closes above. We'll have to think about an interesting way of trying to capitalize on this. But regardless, you can see that the OO as a level is a very, very interesting level to explore. Has lots of opportunity for us to to possibly trade it. And it generally almost always follows a test, rejection, retest pattern. What I'm trying to figure out how we can encapsulate this mathematically is how can we take the test, rejection, retest? Because sometimes you have a test and a barrel through, so that's fine. We give up on that one. But if we have a test, rejection, retest, that tends to be a better candidate for what we want to do. Most of the time. Just looking through the. You see this over and over again here. Where you have a test, rejection, retest. But like, how do we mathematically encapsulate this? It's going to be much harder to figure out because the retest is not continuous, and the gap variance can be massive between candles. Because if you take it just on a pure momentum blindly, you're going to hit a brick wall a lot of times. You're going to hit the buyers. The buyers will run it against you for 20, 30 points sometimes, which is okay. If you say to yourself, okay, I'm going to put a 40-point band around this thing and just simply through brute strength and patience, wait for the trade to resolve my way. But I'm trying to see if there's a more elegant way of entry. But regardless of whether there's just pure brute strength or kind of elegant way of entry, we have a reasonable chance here to create a whole new structure for profit, right? If you guys have any suggestions, feel free to give me. But you can see that the OO trade is just a really good pattern all over again. Test, rejection, retest, right? Which is natural because always the first, it's really rare that you have so much momentum they're going to run through the level. But what is very, very useful as a signal is if they already ran through the level once, it's very likely they're going to run through the level twice, right? And you want to be there for that second assault or the third assault on the move, right? You guys with me on that? So that's something that I wanted to just let you guys take a look at. Everybody has the OO indicator, so you can play with that along. I actually, before I got obsessed with this and completely took my eye off the ball on this, was doing this manually. And it was doing great. Like I was running a small portfolio, and I was really doing nicely with just the most brute strength of like, yeah, it's hitting it, I'm gonna just buy it with a wide band of stop and target, and it was hitting targets 80% of the time. So you don't need to overthink it. I'm just trying to be a little bit more elegant about the entry technique. But the overall principle here, the momentum principle, which is what we're trading, the momentum principle is really, really sound. You could just see it visually over and over and over again on these things. The downward momentum, the upward momentum, it's all really, really sound. I'm actually curious, dollar CAD, one of the world's most difficult pairs. How does this look? How did this look? So by the way, here's my perfect example of one of the world's most difficult pairs. You see how in dollar CAD, pure brute strength just stops you. Dollar CAD is notorious for touching, reversing so much that they're going to stop you out, touching, reversing so much they're going to stop you out, touching, reversing so much they're going to stop you out, and then just doing this thing until eventually, after they've worn you down so much, they'll let the price go. And I think that's because honestly, it's the most manipulated currency pair in the world. You have 4 Canadian banks controlling this currency. You can literally see the manipulation. You can just see them just playing the game here as much as they can. Because if something is a truly range-bound instrument, it's what's called a dealing instrument. If it's a range-bound instrument, who's on the opposite side of all of these cells? The dealers. They're going to buy up all this. Boom, right up your face. No continuation. They bring it up here. Okay, we can't maybe hold it all the way down. We're gonna just hold it enough here to churn it out and make enough money, right? You're gonna try to bust it up. Okay, we'll let you have 15, 20 points, but then we're gonna take it right back down, right? Now, boom, here comes the game. You thinking it's gonna break? No. You thinking it's gonna break? No. You think it's gonna break? No. In every one of those points, being on the opposite side of the retail flow is what makes you money. And you can just see that in the Canadian dollar. It's just literally, you have to appreciate the thievery that goes on here. And then what's interesting is that when the Canadian dollar really starts to take trend, right, that's when you realize that there's something really, really significant going on here. Kathy loves the Canadian dollar on a fundamental basis because the Bank of Canada has gotten very, very hawkish. And you could literally see how here, no matter how much they try, the dealers just can't keep the lid on this thing, and it just keeps coming down. Although, you know, even if they let it go 1 penny, on the next penny they're going to be sure to try to take it back from you as much as possible. So maybe, you know, the thing with Canadian dollar is you just want to trade it the exact opposite of how you would trade all the other momentums. But you know, see how they took it right back down to the downside, and now that there's almost certain they're going to try and ride it back down towards the 22s, 23s as the fundamental forces come back in. But it's a fascinating pair to watch because you could just see, you know, you could see all the trade manipulation that happens here. And obviously, the single worst example, if you were just to blindly run the levels. In fact, if you're going to do anything, you blindly fade the levels, you know. Jonathan, there seems to be a lot of confusion about how I'm trading this. This candle, where is this? This black, to the short side. This black candle, right, will start to appear as the candle starts to, but I'm only trading it once the candle completes. The candle close, every trade I have has to be on candle close. So in this case, the candle completes and I enter the trade, okay? In this case, the candle completes and I enter the trade, okay? Is that clear, Jonathan? Okay. All right, guys. Thank you so much. I'm losing my voice because I did a webinar earlier today, so I'm shot. Good week. Next week, more goodies coming. For, you know, for those who want to automate this thing, we might be able to automate this. In the meantime, you know, enjoy the indicator. We're going to make a trading view indicator of this. It's going to make it a lot easier. And over the weekend, I'll produce the 5 sound files for you guys, so you guys can have it. And I'll put it into the combo alerts folder. Okay. All right. Thank you again. Everybody have a wonderful, wonderful weekend. We start again next week, battling the markets. Thank you, guys. Bye-bye.